Welcome back. You're watching Business Morning on Channels Television. My next guest on the program is the head of corporate banking, Wema Bank, Mr. Henry Alakume. Thank you so much for joining me on the program this morning.
Good morning.
So we're still talking about the two-day meeting of the MPC. For you, this is the first meeting that will be held after the reintroduction or relaunch, if you like, of the interbank foreign exchange market, which was to avert pressure. And that has kind of led to excess liquidity as, well, hoping to have liquidity in the market, but there's been pressure. But have the dynamics changed? Taking a look at the National Bureau of Statistics report, I'll still go back to it, even though I talked about it with my other guests. Portfolio and FDI recorded increases. So this seemed as if there was signing off on a positive note on what the policies of the CBN governor at the time when he announced it was.
Basically, the CBN did a couple of things in the last couple of months. One of the first things they did was to look for a way to assure investors that they will be able to take out their monies when their investments mature. And what they did was basically to do forwards, 30-day buckets, 60-day buckets, and 90-day buckets. They have paid on the 30 days, they paid on the 60 days. This week, they are expected to pay on the 90-day bucket. That has put some confidence, even in respect to correspondent banking lines with most of the banks. Because again, because you had so much, you had because of the scarcity of FX, the shortage of FX, the government had to look for ways to encourage them. And that is what they have done.
So for the banks at this time, would it be, what are they expecting? What surprises are they expecting from the MPC? A hold or a cut or an increase?
I would think the MPC would hold, and you look at what their objectives have been. Firstly, they wanted some price stability. They wanted foreign investments, and looking at the statistics, it has grown by 24.5%, at least the portfolio investments. So what that has done is that it has inflowed some money, even though we haven't seen it in terms of supply to the FX market in recent times. It's still been scarce. But to a certain extent, that tells us that foreign investors are beginning to come back, probably because of what they did in doing futures and forwards, putting at least some confidence, assuring foreign investors that they can always take out their monies when they want to.
So do you think this, because I've asked this question before, but I'd like to know what you think about it. Is it always about the foreign investments or foreign portfolio investors that we're trying to make the environment conducive for, or make the environment conducive for domestic investors?
Well, ideally it should be for domestic investors. Domestic investors have taken advantage of for example, yields today, treasury bills, 20%. A lot of institutional investors, local, have taken advantage of that. Of course, that has created a little bit of illiquidity in the market, in the sense that you see investors, local investors, institutional investors, taking their monies, breaking some other investments, moving from certain baskets of investments to investing in Nigerian treasury bills. And that has, of course, so you see that happening. For example, you have an investor who has deposits with a bank at 10, 11%, says that he can do a 90-day T-bill and have a yield of 18, 19%. You see some of them moving to those buckets. But essentially, what the CBN had looked at was, yes, I have growth, there's price stability, but again, I need some money to bring in some effects, some inducements, some encouragements to bring in foreign investors at this time, because they need to show up and get some fairly good supply of foreign exchange. You would notice again, yes, the CBN or the federal government is going to raise bonds. They want to do that, although I don't know what will happen with the downgrading. Of course, it will make it a little bit difficult, but they have so far they have taken almost 600 billion, from the local market, and they still want to raise debts.
The options before the committee seems to be either or. Either you reduce and or you cut. Okay, it's about three options. Either you hold, you reduce, or you increase. But I will still go back to the last meeting. It's all about diversifying the economy. That's what the CBN governor says. And looking at, you know, the need to move away from oil to manufacturing, agriculture, and services, the banks have a very huge role to play.
Yes.
And my last guest says not so much of an impact whether or not the NPR or CRR is actually moved or is left the way it is. How much of that is actually going to affect, because he says it doesn't affect lending. It doesn't affect lending rates, is what he says. The banks still, because of the economic environment and because of the risks, determine how much it is that you'll be lending. So right now, some banks do between 25 and 30%. And we're talking about diversifying away from the economy to these critical sectors that will grow the economy. How much on lending have we seen recently from banks? We don't see much. Why?
You will notice, or it's common knowledge, that Nigeria is in a recession. When an economy is in a recession, one of the things you do as a bank is to be careful where you put where you lend to. You look at corporates, you look at SMEs, and you look at retail. What has happened in the last couple of months? Most manufacturers have had to practically shut down or shrink their production. In order to reduce costs and stay afloat, a lot of manufacturers have also laid off staff. And it's more like a vicious circle, because what you see is cost of production has gone up. Because of the scarcity of foreign exchange and the devaluation, you find out that the cost of production has gone up significantly. Prices have risen. Unfortunately, on the other hand, demand has reduced because people have lost their jobs. Real income has reduced. So you see people buying less. So you see you have a lot of stocks. So they produce, even though they are not producing up to the capacity they would, they are still not able to sell like they used to. Now, what that means is you'll begin to see possibly some restructuring and non-performing loans. So at times like this, the risk management of most banks will look at it and say, well, we need to be careful the sectors we want to invest in. That does not mean that you still will not invest. It's just that there will be a slowdown in lending at a time like this.
Slowdown in lending, and in some cases you actually see very high interest rates. So do you want to make a comment on that?
High interest rates, yes, interest rates went up at a certain time because, of course, the last MPR. But if there's a reduction in CRR, there's a reduction in the MPR, definitely those savings will be passed on to the customers, definitely.
So talk to us about trade. Improved trade. I know you already alluded to it when we started this conversation. Do you expect to see more of that happening, particularly, and I asked both on this question, I'd really like to get your take on it, for those items that have actually been restricted from accessing, you know, Forex at the interbank foreign exchange markets. They, again, are hoping that this time around there'll be a change in that stance. For you, should there be a change, and if, you know, yes or no, and why do you think there should be a change?
Well, firstly, when you look at some of those 41 items, some, honestly, we shouldn't be importing. Some, neither here nor there. But if you ask me, I think when you restrict some items, you make alternatives. Some of these alternatives or policies for alternatives will not come immediately. You restrict importation of rice and you encourage production of rice. How long will it take?
Okay. Now, I'm glad you actually mentioned that. Agriculture was one of those that was listed among the sectors that needs to be given more support at this time. And of course, we're diversifying the economy and focusing more on agriculture. Yes. But how much of on lending to the agricultural sector has come from banks? If you
looked at the statistics, agriculture actually grew by 4.5%. And for most, what CBN has done again is to come up with certain palliatives and certain encouraging banks to lend to agriculture. And they've actually come up with some fund for agriculture. And that has begun to have some effects. And that's why you see a growth in agriculture. So definitely it's increasing. But like you say, the gestation period for agriculture is far longer than regular trading. I see that by the end of the year, agriculture will continue to increase. However, if you look at it again, you have animal husbandry and you have crop. Crop was actually the main cause of the growth from the statistics that came out. However, there's been some warning on flooding. What that may mean is that if flooding comes, crop production may reduce.
But we don't have flooding in the manufacturing sector, and that's another very key sector of the economy that needs to grow at this time.
Yes.
So what are the banks doing? Even though it seems as if it's neither here nor there, if there's going to be any rate shift, the banks will still, fall in line with economic realities and lend appropriately to the sectors that have less risk. But the manufacturing sector, is it a risk for the banks as well?
It's not a risk. Manufacturing, for manufacturers, they have a lot of assets. They have, but you will notice again, banks will always continue to lend to manufacturing. The main problem at this time is the access to foreign exchange for the manufacturers. Most of them, or almost all manufacturers, rely on foreign exchange to import their raw materials.
Which takes me back to that same 41 items, and it would be good for you to actually now comment on that for us.
Well, I think some items, if you ask me, I think MPC should, bring back some of those items because they are very, very key to manufacturers. But some of them would have to stay for now.
So for you, which ones would that be?
Well, it would, for example, chemicals are a very key to most of the things we do. I think for the likes of chemicals should be reintroduced.
Okay, so which way the pendulum swings at the end of this meeting now, which will be tomorrow when the decision will be announced. How do you think banks will react?
Well, it will depend on what happens.
Okay. Let me rephrase my question.
Okay.
Sorry about that. So if they decide that they will maintain rates, how do you think banks will react?
If they decide to maintain rates, what it means definitely is that again, banks would continue to lend to those sectors that they have continued to lend to. They would definitely, of course, that means there will be no increase in lending rates, and banks will continue to work with the central bank on all those other initiatives they have put forward. It's like seeing the effects of what has been happening in the last 3 months and working with them to. That's just it, basically.
So if they decide to surprise everybody and cut rates, or even increase it,
if they cut rates, what that will mean automatically is that I will expect banks, of course, to pass on some of those savings to the manufacturers in terms of cutting rates to the manufacturers, lending rates, and see how that goes.
Well, thank you so much, Mr. Henry Alakume, for coming on the program this morning. Henry Alakume is the head of corporate banking with Wema Bank. We've got another perspective again to this particular issue. Join us again.